Hello, everybody. It's Joshua Hayes here with our May 12th stock market wrap up for you to use on May 13th. First off, let's go ahead and look at the stock market indexes. The NYSE basically up 1.17% today on higher volume than the day before, but still below average volume. That then moved over to the S&P 500, which was down 0.10%. Higher volume than the day before, however, below average volume. Also, look at intraday on this chart. Do you notice the tail on the S&P 500? Do you notice the tail in the New York Stock Exchange? And now on the NASDAQ, another bullish tail for a negative day. The NASDAQ had the worst day, down 0.88%. However, even more bad news comes from our leading stocks. This is a daily chart of the IBD 100, and you can see it was down over 1% today. And that means the relative strength line taking another dip down again. So much for the dip up yesterday that I was prematurely happy about. I should have known better. IBD 85.85, and as you can see, look at the relative strength line. Dips down a little bit. Look over here. As you can see, it's down over 1%, making these the worst indexes, even worse than the NASDAQ. So as you can see, the IBD indexes, once again, can't get much going. Look at the downtrend in the relative strength line since November to March to May. It's just seriously pathetic, but it's good for one thing. The entire rally, yes, the next time we bounce off the lows, if we have another leg down like this, I will play stocks off the lows, unlike what I did last time. But I thought that we would set up and that the stocks above the 50-200-day moving average had set up like they always have in the past. Let's go and just look at a monthly chart. Like in this 2003 uptrend, look at how the 2003 to 2000 uptrend unfolded for the IBD 100. Barely pulls back in 04, barely pulls back in 05, barely pulls back in 06, remained bullish the entire time. During the dips, the relative strength line still held up extremely well, but during the rallies, it was extremely strong. And that's why the IBD 100 went from 100 when they started tracking it in 2003 to 380 at the top, a 380% gain, while the NASDAQ, I believe, was up. Let's go just find this out just to be accurate. Don't want to give inaccurate information. So while the IBD 100 was up 380%, the NASDAQ was up 121%. And the NYSE actually was probably up more. So we can use that actually. 128, no, about the same. So as you can see, the 380% gain in the IBD 100 from 03 to 07, 380%. Or, excuse me, 280%. I'm so sorry. 280% gain compared to 121, 130. Which one do you want? I know which one I want. But now notice, even on this last uptrend, I had FSLR 250%, DRYS 100%, APPY 150%. Why did I get those? Look at this little uptrend. Look at the relative strength line. Look at it hitting a new high over the last high, even though it doesn't even make it back to 380. Gets halted around 350. So the IBD 100 didn't have to make a new high for me to get the gains in FSLR, APPY, and stocks like DRYS that were leaders because the relative strength line hit a new high. Now look at this little upturn. Uh-oh. No rally. Look at this little upturn. No rally. No rally. So that's the bad news about this one market environment. Here's the move intraday. Dow Jones started off weak. NASDAQ extremely weak. SP 500 very weak. Sold off all day long, looking like it's going to be hell on earth today. But by 1 p.m., look at the reversal. Beautiful. Way past the old highs on the Dow and past the old highs on the S&P 500. Sadly, the S&P 500 couldn't hang on. The Dow Jones did. The NASDAQ didn't quite get up to that old highs. However, if the ugly candle bar would have been like in the S&P 500 Dow Jones, like the NASDAQ, it would have been very close to the old high opening. So not great, 0.88%, but still, compared to where it was in the lows, as you can see, closing in the upper end of the intraday range, always bullish. I use financialvisualization.com to look at the index charts whenever I do not want to either show my personal portfolio, like right now we're working on opening a new one for me that I can track separately so we can track it in real time, kind of like how another website does. But besides that, overall, this is a good index to look like if you don't have Interactive Brokers or MB Trading or whatever, Sogo Trade, Scott Trade, Zetco, whatever. I don't care who you use as long as it's one of those, because the transaction should be under $5 a share each time you trade. If you pay more than $5, you're paying way too much for this strategy. So you can see NYC where it's going to have resistance, 200-day moving average. We got another resistance line coming in. I'll have to redraw these, draw them across the top of the recent highs from 07 to 08, draw them across the recent lows from 07 to 08, and then we'll have our resistance lines for the 200-day moving average. As you can see, though, it's acting as a magnet. The NASDAQ acting as a magnet. The Dow Jones Industrial Average acting as a magnet. New York Stock Exchange acting as a magnet. SP 500, I think, was the one I didn't show up, acting as a magnet. Uptrend line is now broken that I drew. It broke yesterday. Breakdown, and it followed, continued to break today. So that uptrend line now has been broken down through. And now let's see how the S&P 600 did. Did it do as bad as the IBD 100? Yes. So that sucks also. Look at the relative strength line now. Making new lows before prices. Look at that. Kind of move my arrow up. Move it down here. Let's look at the mid-cap 400. Ew, sorry. Pressed all the wrong buttons there. Oh, yeah, down as much as the IBD 185.85, so just another nasty day. Look at the 200-day moving average acting as the magnet. So it'll be until the indexes can find support, probably around the 50, then get back above the 200, and then we'd be in bullish. But right now, I've got my hands up. I am currently, I have 27 longs. Sadly, they're all small. Very, very tiny now, as I've taken profits on almost every single one, besides the recent new longs. And then shorts, I'm down to 13. I covered two more long-term winners that were up 41 and 48% of us for us as of yesterday, but we're up at the lows right around, I don't know, I think I would say 70%, 60%. Let me go and really quickly back in November and look at some of the lows on those stocks. What I can see is a reading. Okay, I got 55% and 46%, so that's actually pretty good since we're leaving at 41, 48. So not bad, but that's excellent. Shows you that the pattern works. That's an 80% gain and a 90% gain that we get to take on those two covers. And then we're going to have small, one other cover, small, to talk about, and then 3 sells and then 2 full sells, and they were pretty nasty. However, we've locked in gains on 3 of them. Only 2 of them were for losses overall. So not bad. Mixed market. Don't know really what to tell you. Basically, here's how I see it. Let's go back to the NASDAQ really quick. Very, very short-term trend. It's down now, obviously. Connecting these highs. Looking at these highs. It's moving down. Sub-intermediate trend. I'm going to call this it right here. And it's up. Intermediate term trend, I'm going to call it basically lateral to slightly up from the October-November lows. During a linear regression line, it's slightly up. Then the long-term frame, if I go back to the 2008, let's do this part of the downtrend back to June. It's in a downtrend. So short-term down, sub-intermediate term up, intermediate term up to flat, long-term down. Down, kind of up, down. That is an extremely mixed market. 1, 2, 3, and then the fourth one. And that means that right now it's kind of in the middle of everywhere. Shorts could work or longs could work. Nothing is hardcore for certain right now. And I have enough time to show you some commodities. So let's look at oil. Oil continues to go higher. It's been in a nice little uptrend. This one is the short-term uptrend for traders to use. And then another more, I would say, more secure uptrend would be this one to use, connecting the February lows to the April lows and on through. And right now, oil's about ready to run into resistance at the 200-day moving average. So oil longs, you might want to look to take profits there if you can get it over 60 like you did intraday today. Hopefully some of you took profits. Silver, extremely bullish day today, 1.94%. Love to see the metals after it bounced off the 200-day like it did. It was hard to go long there, but if you did, you just made a nice 14% gain. So I hope some of you guys did. And then let's look at platinum, because platinum was looking really weak. Nicely, it bounced today, thank goodness. And then gold, I'm pretty sure that did well. What is all that noise? Oh, I think somebody's talking in one of my chat rooms or Facebook. I must have open or tweet deck or something. Okay, so that's gold up 1.11%. You can see, look at where it closed, 9238.80, 924.90. Near the high of the day, basically gold had a very, very bullish session, and I'm still bullish on the commodities. The only one I'm not bullish on, our United States dollar. I swear to God, I see a head and shoulders top here. Shoulder 1, head, shoulder 2, the downtrend line it needs to break through. However, to me, it already broke through by connecting those lows. And now if you went short where you were supposed to go short from the breakdown of the head and shoulders, it's already a 2.65% gain. However, the major bust will be with a move below this support line, and if it does that, look out below. Anyway, I need to wrap it up there. I'm almost into the 11-minute part, and that's where we can't put it on YouTube. So I'm going to be back with part 2 for subscribers, and if we do need a part 3, we'll do a part 3, but we might not because market's kind of mixed. Charts are just looking okay. There's not too many great ones, but here's the thing. I have way more interesting possible new longs in the future than shorts. So I would still weigh, even though it's down, up, barely up, down, to weigh myself to the bull side for the short term until these charts completely roll over. Aloha.